Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, there's lots of great ideas and opportunities for you throughout this show. Well, the stock market was 4 for 4 to the upside in this holiday shortened week as investors ignored the raging pandemic, happy to focus on, well, potential recovery. They found news to cheer every single day, and that started right out of the gate on Monday as Boeing said that they're ready to start testing the 737 MAX again. And that lifted the Dow some 750 points by the end of the day. Added to that was Brazil saying they're going to produce AstraZeneca's best hope experimental COVID-19 vaccine. So the combination of those two pushed the market up very strongly early. Tuesday, stocks moved up sharply again. Q2, the rebalancing did help. And that came big gains despite Dr. Fauci coming out and claiming that COVID cases could get to 100,000 a day. Wednesday, we saw the market move up again. ADP payrolls were better than expected, 2.37 million. And then Pfizer said that they had positive test results on a potential vaccine. Fed minutes came out, and they said, of course, they're going to be highly accommodative for years. That means, QE forever, and that means they're going to buy absolutely everything. Thursday, we did see record COVID numbers as there was 50,000 around in the whole country, new cases. In Florida alone, where I live, 10,000 new cases. But that didn't seem to stop the markets as there was a payroll shocker. They expected an increase of about 3 million new jobs. There were 4.76 million new jobs created for the last month, and the U3, which they expected to fall to 12.5%, fell all the way down to 11.1%. Also adding to that big upside movement was Tesla. Tesla came out and their shipments for Q2 were just off the charts. About 90,000 cars. Nobody expected it was going to be anywhere near that. But does that warrant 125 PE on what are extremely exuberant earnings for 2021? Stock gains about 6% on the day. It was up almost 10%. And that is an exceptionally high price for that stock. But I got to tell you, for our members, just based on the technicals, it looks like it's even going higher. So Q2 ended Tuesday with a gain of about 20% for the quarter. That follows Q1, which was a horrible 19% loss for the quarter. And while we're getting a sharp rebound this week, which does raise our short-term targets for just the next week or so, it also does affect the short-term targets into August. The action for the first 6 months of the year really to us sets a trend. The elevated volatility that we see with these giant moves to us looks like the trend is going to be much more of that comes into the future. I would say that it's going to keep investors guessing whether or not we're in a bull market or bear market. First quarter, everybody said bear market. Second quarter, everybody says bull market. And we think that they're going to have to keep guessing whether we're in a bull market or bear market because this volatility we think is going to be here for years to come. Of course, our guess, and we'll call it an educated guess based on our long-term analysis, still calls this one a bear. Based on the deluge of emails and social media comments on this topic, for now, investors believe there is only one market god. That's the Fed. And that choir is singing, and we're hearing in that tune that the market can't fall while the Fed is buying everything. Every single one of those emails. Fed, 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 Fed. And who's to argue? Bad news is good news, and horrible news is better, and good news is really good news. So no matter what you hear, the market does try to get to the upside, and it's been pretty successful at it this week. The other side of that is that without the Fed juicing the markets, what else do they have? We've seen in the previous decade, as the Fed was trying to juice the economy or hold it together, we had extremely subpar growth since the Great Recession. And right now, businesses outside of those benefiting from the COVID-19 stay-at-home world that we live in, the rest of them, and that's the majority, are hanging on for their life, if they're not bankrupt already. So for now, we have Fed juice. And history shows that the bond market will tell us when that juice goes rancid. And the Fed right now, they have to continue to hold this all together. And that means they're going to be monetizing much, much more. And there is huge borrowing ahead in order to accomplish that. If they don't do it, the market, the economies, they're all going to just fall apart, because without the Fed, what do you have? Bonds will tell us when that Fed juice goes rancid, as they have historically. But right now, they have to borrow many, many trillions of dollars. We'll be watching to see what the bonds tell us. There'll be some strong messages out of there. For the week, very, very solid gains as we see stocks gaining some 4 to 5% depending on the index. Bond market 30 years down about a half a point. The 10-year yields tick up about 4 basis points. Gold, which got over 1,800, then failed. It backed off pretty sharply from there and now is just kind of wiggling around right now. Gains about $4 for the week, the gold market, maybe a little more as we are here now at midday on Thursday, the last day of the week before the Friday Independence Day holiday. Dollar gains about 0.2%, and the oil market gains about $1.70. So it's been a 4-day week with a ton of action for sure, and we're going to move on into this shorter show today. We do this on holidays where we only give a little short show, and you'll of course get our short-term views for the coming week. Before we do that, make sure that you subscribe. If you're watching this on YouTube, to give us a thumbs up if you like our videos. We do lots of them out there, so please do share if you know people that like the markets. Subscribe to this channel, and we do put a lot of clips out there. Follow us on Twitter at askSlim. And for information on our memberships and content, and I'm going to show you a little special we have going on right now, write to Matt at askSlim.com. So for this week, last couple weeks we've been running a special preview for our most popular services. So we're going to bring back our level 4 special trial right now, because the popular services people didn't get to see really the level 4 information. What is level 4? Well, that's our highest level right now. Our subscribers get askSlim annotated charts live on our Thinkorswim platform, Thinkorswim being our preferred broker. You also get our proprietary studies, our option bias indicator, market condition indicator. Those are just phenomenally good studies for you understanding market conditions. If you're an option trader and you want to know how to bias your positions, the OBI, option bias indicator, is fantastic. And the Slim Ribbon, one of the best momentum indicators you will ever see. You'll get our custom charts per request. You can request from me and Arvi, we're up to 2 symbols per week, where we bring you our unique style of analysis to those individual stocks that you're interested, or ETFs or futures. And you will get our archive grid with our trade ideas and our other exclusive charts. And you'll have full member access to everything. All of the level 3 content, that's our Slimulator rankings, and all of our trade ideas. Level 2, over 500 videos in there for you to learn about trading and investing. Just amazing. You also get the stock index report live, the live feed. that runs all day long with our great levels on there and our reversal scout. You'll get the stock index report, daily report, and then you'll get our level 1 momentum tracker. It is incredible with over 1,000 different symbols in there. We really get to see the conditions of the market. I don't want to spend all the time showing you absolutely every single thing. The amount of content we have in here is just unbelievable. If you're a thinkorswim user, or you plan to be, you want to become a level 4 member. And that will give you all of the things I just talked about for our special trial for 1 month, or you can get a 3-month trial available. You want the information on that special trial? It's half price right now. Write to Matt at askSlim.com. All right, so we're going to just jump right in now to our short-term view for the coming week. As we always do, we look at the next 2 to 3 weeks, actually, and we rank ourselves by how we did. It's hard to rank ourselves this week because we only had 4 days so far, and if I look at gold, dollar, and the bond market, we were really spot on. Those were pretty good bullseyes for just a short, brief period of time. So if you trade those, you're probably really happy. Light crude, well, it's been kind of stuck. It didn't quite didn't turn down quite as we expected yet. We don't get much credit for that, a little bit. And the stock market, well, not so much. We did miss that one, as we expected the stock market not to be able to rebound as strongly as it did. So we get a miss on that. So we're running 65-70% for the week, as we were just really good on those three: gold, the dollar, and the bond market. All right, so now let's get into what we're looking at here for the coming weeks, actually. And we'll start out by light crude /CL. So that is the light crude market, and you could see that it is plainly flattening out in there as we get the market kind of stuck. Let me just get my pointer up here. Kind of stuck between the intermediate resistance level right over here that you see, and some shorter term support levels right in here. This level is about 42, which it got pretty close to back here 2 weeks ago. This level here is around 34.5. There's a little intermediate support right over there, or short-term support around 37. So right now we're projecting it to pull back to 37 in this next week and a half or so. It could get down here to 34.5 and still really stuck in the range. Momentum, you can see, still strong. That's your slim ribbon telling you, and here is your confirmations or buys or add designations telling you that the market has been strong, and all of those would have been completely correct, and telling you that no rolling over in here yet, as you could see, and it still remains positive. Some of the evidence is that the intermediate looks like it's turning down. We showed that in future speak, that pretty soon that's going to happen. Heating oil, gasoline, the products, they're looking that way too. So we don't see a lot of upside in here, but there's not a lot of downside either. We're just looking at this range that we expected to trade in, 42 down to a potential of 34.5. over quite a number of weeks in here that it looks like. So there's not a ton in there that we see, but the trade right now to us looks like the highest probability to the downside. Take a look at the gold market, as gold got the really pumped at one point and then failed. You could see the beautiful cyclicality in there. For those of you that are new to our work, you can see in here cycles. These are cycle brackets that are on the bottom. What these are just a drawing tool to help us see the rhythm in the market as you see it right in here. There are multiple time frames in here. This big cycle right over here is a little more dominant, and you can see that it kind of shifted out. There's an even bigger and more dominant cycle right over here. So where are we now? We're rising, and we're getting a little chop right there. You can see that reversal. And that says to us that it may have a hard time getting up through 1808 right now. So we're going to call the next couple of weeks kind of choppy action in here. 1810, maybe the top of the range, the bottom of the range here, about 1760, 1755, right in there. But then we think after that it moves up very sharply, with our projections up at 850 or so for just this short term. So we see a lot of choppy action in here, the market's struggling. But that is likely to end up to be a sharp spike to the upside when that's over with. It could happen right now. There's no reason for it to just stop here at 1810, but you have that reversal, so it just gives me a sense that you may be in this choppy period for a couple more weeks before it then takes off. Some of the evidence, intermediate pattern, very strong. Short term, well, choppy. So the two of those are fighting against each other a little bit, but then we ultimately see an upside breakout. Look at the momentum in here, just super strong. Here was your buy pending. It just actually did turn into a buy right over here today. So these are really overall really good patterns. We're just going to look for chop until it breaks out pretty significantly on the upside. That is a look at the gold market, and over that 1810 area, or that 61.8% fib extension at 18.25, we don't even know where it's going to go to. It could just fly pretty significantly after that. So yes, the patterns are very, very bullish when I look at that. We'll call for the range right now with an ultimate breakout of the range above that 1810. All right, next one we're going to look at is the dollar sign DXY. So here is the daily chart on the dollar. Again, you will see cycle patterns right in here. So this pattern bottomed right here, the next one bottomed right over here, the next one's projected to bottom here. These next week and a half right there, that next week and a half, looks to me like it is going to be down. So we're calling for a downside move in here. We were calling for a move down to $96 right over here. It's killed a little more time here, and the momentum went neutral, as you can see. So we've upgraded that by a little bit to about 96.50 right over here on the downside, but that does not change the pattern, which says that just as right here where it fell at the end, just as right here where it fell way before that, there's a high probability of downside right over here. If that's true, that's not going to let gold move down at all. As a matter of fact, you might get that earlier breakout in the gold market if this is accurate. Pretty high probability we see gold trade down, the dollar trade down to 96.5 or lower in this very near term, then get a bounce before we think it gets killed after that. So some of the evidence, great big top formed in there, and we saw a breakdown, and right now we're just looking for this modest downside and a lot more downside later on to come. That is the dollar. Now we'll take a look at the bond market. Okay, here is your daily chart in the bond market. Now this, again, you can get a great example of cycle analysis. So here is your dominant cycle pattern right over here. It's made up of minor thirds, just like music. You can see that. And here is your first minor third here, your second one here, your third one here. This one made its little bottom right over here and now is turning up again. I know you can't see that, so we're just going to make this a little closer and tighter for you to get a little better look at it right here, and there you go. So you can see that the first minor cycle right over here didn't bring you much of a decline. We call that swamped. In other words, this big upside energy is so strong it would not let this correct. And you could see momentum in here as it turned positive right over here. And now we're projecting higher prices. As a matter of fact, over these next few weeks, we could see the 30-year bond get up to 180. If it fooled around here a couple more days, it would not be a big deal. We really would not want to see it fall much right after that, because that would say something is turning weaker in here. We don't think so, as we have stronger momentum and the likelihood of an upward turn right there, and that may relate to what we're going to say about the stock market for the coming week or two. As we still do believe that there is a correction coming in the stock market. Therefore, that may be very well supportive to the bond market. So we think that this low is in place. We had talked about it getting down to 77.05 down over here on that support. The low on this day right over here is 77.09. So you can see it was very, very close to what we expected. And now we're expecting it to be moving up over these next few weeks. So that's a look at the first four. So now we're going to take a look here. Here we'll look at the stock market. So the stock market is really incredibly strong this week. Lots of reasons you could talk about, but really what I talked about in the beginning of the show is that investors just simply are not looking at anything other than the support from the Fed, and using that to be able to look over the entire crisis. We're now a double crisis of the economy in the worst recession since the Great Depression, and also the crisis of the pandemic going on. So the pandemic not going to get solved anytime soon. The financial crisis not going to get solved anytime soon. So what do you have? You have the Fed. Well, in the meantime, that is being reflective in the stock market, which has managed higher prices. So let's take a look at what we're looking at in here and what happened and what we think is going to come moving forward. So we'll put up now as we look at SPX. So here is the SPX chart coming up right now. And there you will see the up move that we had in here is quite strong. And this low right over here getting down this deep to the 78.6%. The probability of getting up here to that old high when you get to the 78.6% is small. So this was the reason that we were quite negative, believing that the top, which was set by that island back over there some weeks ago, that is, in our opinion, the what we see happening here is a test of those levels up there. So we thought that if it could get up and close above this 31.55.75, that, well, we'd have to reevaluate even if it got there, and that's what we've done. So we've upgraded our targets for the downside in here, and this points to the next 5 to 7 days. So these numbers now on the support level are 31.02, 30.82, and 30.64 on these minor supports, and we think it's a high probability we'll get under 3100 in the next 5 to 7 days. 30.82, that's not very much. It's barely 2% on the downside, and for us that's a pretty significant upgrade. It also does push out the much bigger decline, which we see coming in mid-July and early August, out over into this cycle. So we thought it would be starting in this cycle. We thought we'd have two waves down, the first one down on this timing at this cycle low, and the second one in this cycle that's way out over here. That would be a very, very strong likelihood that the intermediate patterns and the short-term patterns bring you that decline out into August. Still, you can see there's been no breakdowns in here whatsoever. It tested this level here and then bucked the odds and then came up to this kind of level right up over here. That is not, in our opinion, normal, but sometimes the lower probability things do happen. So that's where we are right now. For the next week to week and a half, we're expecting a pullback in here. This minor cycle right over here, 10 days, that's what we're looking out. The dominant cycle about 20 days. That would make a high probability of a decline right over here. Now it's Friday on a pre-holiday day. The S&Ps were up over $50. And look at the triangular formation that's being formed in here. Again, that would be the probabilities of it coming down are high, but then of resolving itself above these levels rather than below these levels is also high. So it's hard to make a very negative case in here. Also, the positive momentum we had in here, which went neutral and began to chop, is now turning up again. Now, it could turn down again. It's not much. We don't have much in the way of momentum in here right now, and it is just choppy. So we're going to call for the next 5 to 7 days a move down over here into these minor support levels in here, and then projecting out the following couple of weeks would be another rally to these levels and then the big downturn. But the downturns in these intermediate patterns have tended to be about 3 to 4 weeks of some severe decline. So that would work out to mid July right over here to the time when we now think that top would come, and then and then into the middle of August something pretty severe on the downside. So maybe they start focusing on the election at that time. We're going to be getting pretty close in here. Who knows about COVID? The worse it gets, the more the market likes it, it appears, in this horrible condition of so many people sick. So it's really hard to tell about how COVID is going to affect it. It really is not now, as you could see that. So 5 to 7 days to the downside, attempted rally, and then a very big decline into August is what we see. And again, we're looking for long-term, intermediate-term projections down into that 2830 level on the S&P 500. We've had no reason yet to upgrade that, but again, the market will tell us about that going into the future. That is our short-term view for the S&P 500, as you can see, and what our projections are for the coming week. That is our abbreviated show today, as we just did a little shorter stuff as we're in the holiday here, and we'll be wrapping up the week. I want you to have a very safe, wonderful time off. Wear your masks if it's mandated out there, or if it's not. Stay out of trouble. Be safe. It is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been